Hello, everyone. Hello, warriors. How's everyone doing today? Anyone out there think I need a haircut? Give me a Y if you think I need a haircut. Can you hear me now, Sudhir? So next time you come, hi Scott. Next time you come here, we start at the top of the hour. Okay, Stavros. Okay.
What's happening? We have so many Greeks here. Hello, good morning.
Good morning. How are you?
Hi.
That I don't think Zolt is. No haircut. You look like a rock star. Andy Warhol. Oh, come on, Ziggy. Anyway, I want to welcome our viewers from investing.com. I know a lot of you guys are mainly involved in the stock market, so I just want to do a quick review and victory lap of what we talked about last Thursday. So last Thursday, I pointed out this 29.75 level as being a pretty important pivot. It played with it a few times. We traded underneath it, closed above it, closed on it, but we really had an important close on Monday, really Tuesday, I believe it was. Yeah, Tuesday, Wednesday, Thursday, on some negative news. And the magenta line right here, I was jokingly calling the line of death because that would have negated the breakout from here that actually measured 3,100. So, in here, I thought there was a chance. But once we did this, which was yesterday, and we tried to hold it the first down day and penetrated it like a hot knife through butter. So the Bulls have one more hope here, and we're right on this line. I had this line drawn before we got here. Okay, I just took these two lows and figured it could fill out to here, and there was a measured move that told me 28.80 was a possibility. There was also a fib there, 28.73. So here we are. What I did last Friday is talk about the 2-week reversal that we had, which we hadn't had one in a while, and that was this candle right here. And as you can see, if we just go back to the daily, there's major problems here if we melt down. I don't know what can turn it. I'm not sure if the market wants a stronger than expected NFP tomorrow or a weaker. The dollar also has put in a pretty important high, but keep this in mind. If we take this out, I believe the June low is the target. Of course, there'll be stop hunts under here and here, but I think this is the grand prize should this occur. And for you super bears, there is ear formation, which is saying that we're not going to this isn't just going to be a correction of this recovery from early this year, late last year when we had the swoon into the end of the year. The bulls would say we'll get a correction maybe back down to 2640, 2600, 2500. The bears will say this is a megaphone top and this is not going to complete until we get down to 2100. Everyone with me? Any questions on the analysis for S&Ps? It's right now to me it looks, yeah.
Good morning.
Good morning.
I was just writing in the chat room, and since you're talking about the S&P, another factor that is quite worrying for the bullish case is that we got indices turning lower at the start of a new week, new month,
yeah.
and new quarter.
Yeah, we wiped out all of last quarter's gains the first day of October. One down day.
And if you remember, we've talked in the past about the increased possibility of finding, highs or lows at the beginning of periods.
I learned that from you.
So, it is an
You're
extra...
my mentor.
That's not the case, that.
Yeah, you are.
So I think it's another thing we really need to keep an eye on, because it's a rather bad omen, right? I mean, does that on itself mean that we're going to be plunging and like entering a bear market? No, it doesn't. But several factors, we were talking a few days ago about how many negative possibilities the market is completely discounting and unseemingly
Yeah.
of why we're doing that. So,
Yeah.
from a macro perspective, there were a lot of things that the market could be worrying about, and it decided not to do so.
Yeah, it's
So,
like, so the
yeah.
tipping point was that piece of economic data, and I think the political situation here.
Exactly. We have
But
geopolitical risks, we have political risks, we have valuations that, in order for them to prove to be right,
Okay, stop. I'm getting
yeah.
very bullish and almost bought a 10 lot in the S&P.
Yeah, that's
plus
true.
remember, there's the blackout for the buybacks coming.
Exactly. That one as well.
And earnings as well. So it's really going to be like a triple whammy, I think. I agree with you.
Yeah. But you know what's cool? Anyone that was hanging out with us last week, they were prepared for negative technical action if it happened. They could have liquidated some of their 401k. We talked about buying insurance that, I said no one likes to collect on their insurance, right? You have homeowners, you don't want to fire, right? But you have it there in case you have a fire. And the fire is starting to burn. And this is, and Steve talked about higher lows. We had, Mark was on Newton, and Steve brought it up, and one of our attendings brought it up, higher lows in the VIX with the market making new highs for quite some time. So the fact is, for a free service, which Face is, could have been very priceless to people if they had heeded what we had talked about last week. They'd have cash now to be buying things a lot cheaper if they didn't try and trade the short side. So, I'm proud of how we prep traders for something that could be adverse to their net worth and help them avoid the landmines. I rest my case.
Absolutely.
Okay, so Steve, I don't know if there's anything you want to cover. I mean, the dollar wasn't as big of a play, but dollar peaked at a pretty important area. I mean,
Yeah, we
unless
got
we have
rejected
something.
from the same channel and
Yeah.
the internal trend line we were showing. But
How
I think,
how about this? Take a picture.
yeah, we'd better.
What is that?
Yeah, I know what it is.
You don't know.
It's a
I'm your
three-drive
mentor.
formation. I know.
Oh, okay. So if you could count to 3, you could trade.
Absolutely.
Okay. All right.
But I'll have plenty of time to go over it. Let's see what Blake is looking at. I'm always interested to know what he's looking for.
Take it away, Blaker.
He's in the chat room laughing. I said we should rename Face to the Steve Monologues. What do you think?
You
Oh yeah, what was the wasn't there something on Larry David that his wife was auditioning for the vagina monologues? I swear to God, it was an episode. I'm not making it up. Anyway, you guys should watch Curb Your Enthusiasm if you get HBO over there in Greece. It would crack. You know who would like it? Steve, because Larry David can aggravate anybody. So anyway, is Blake back from chat?
If he's not laughing,
he should be.
Huh?
He's muted right now, but he's
okay.
apparently
Actually,
he's here.
Funny, I unmuted my I unmuted my my other mic, and so my office is like, "Hey, Blake, you unmuted the wrong." Yeah, I was gonna say, when Steve takes the mic, I'm just gonna go ahead and head out to lunch. So I'm just heading out to lunch. Now, before you guys freak the entire listener viewership out, you got to think about what could turn the market higher here, because I hear what you guys are all saying. And by the way, Stelios jumped in our chat room the first day of the month, 2 days ago, and it was, for me, it's in Asia. I was just wrapping up and going to bed for the night, and he wakes up, because he's in Athens. He wakes up when I'm heading to bed, or sometimes I already go to bed. But I was just shutting down my computer, and I didn't say anything, because if I got caught, starting to chat with Stelios, the next thing you know, it's a half an hour later, and it ruins my whole next day. So, but he said, you know, I remember this vividly. He goes, good morning, everybody. You know, start of new month, new week. You know, the equity market should come under pressure from here. And this was in our chat, and it was the first. And so it was Monday night or Tuesday morning for him, and really called really well. You know, the markets obviously came under pressure, but you know, like I said, before you freak out everybody, you know, we have a lot of big things happening between now and next week. Next week we have the Chinese, you know, trade talks, the big delegation that's happening. Going into Thursday and Friday of next week. So, you know, before you get too overly bearish, you know, you got the ISM services numbers that come out today. Everybody's expecting a bad number. So, you know, what you could call Steve goes, well, you know, the manufacturing is more of a lead indicator. Is it in a services economy? I don't know. But
You know, what great balance, Blake. You know, we
but
freak people out and you give them hope, even if
well,
it's false hope.
let's I think the equity markets are mispriced here overall, but that doesn't mean that we can't rally
Of
from
course.
here. And the fact of the matter is if we have decent ISM numbers, we have a non-farm payroll number on tomorrow that doesn't fall apart, and then you have positive outcomes coming, China US trade talks next week, you know, the S&P can be right at its highs again. And I, you know, and I have to point out the fact that, look, Donald Trump he's backed into a corner. He is. And he's you know, look at his Twitter feed, and it's all about Biden and Biden. He's trying to, you know, deflect and you know, he's fighting for his presidency, and he's got this impeachment hanging over his head. You know, he's going to be very hungry to put together a China US trade deal. I am very much an advocate of selling equities after a China US trade deal has been reached. Now, obviously, I'd have to look at the magnitude of what this trade deal is, but it doesn't, you know, even a truce will probably spike the S&P back up to 3,000. Just a truce.
What if there is no deal?
But if there is no deal, then the market's shot. You know, the
Okay,
market's
so
done. Yeah,
then it'd
yeah.
be too late to wait for a
Well,
deal.
yeah. Well, I think that you know, you can count on the S&P going to, you know, probably below 2,500. Now, the thing is, and you also have to think about this, is, you know, Donald Trump's barometer of success for himself is the stock market. So you know, that he's seen the 4% decline in S&Ps over the last few days, guaranteed. And in his mind, you know, I got to keep this market higher. How am I going to do that? You know, that's, you know, because if you can't, if he you know, constantly gauges his success by certain barometers, the stock market is definitely one of them. So, you know, you can't discount and that he won't do anything in his power to protect the stock market gains. That doesn't mean he'll be successful. Like I said, I think even you know, him backing off some tariffs, calling a truce, saying that, you know, you know, let's you know, we're going back to, you know, square one, and we're going to start negotiating.
It'd be
And
great if he could generate a rally back to 2940.
you know, but I
Wouldn't it?
think, yeah, I mean, I think it's possible, and
That'd be, it shouldn't close above that.
that's why I'm skeptical to get too terribly excited about stock market losses ahead of, you know, what could come in the next couple of weeks with China. You know, you look at, let me just take a step back for a moment, and you know, one of the for the currency market, we obviously look at the dollar yen. The yen helps us a lot, right? The dollar yen's probing some pretty key support. It was my chart of the day yesterday. We're probing this 38% retracement, possible double top, M top formation. It's actually quite beautiful. And usually when everything's so perfectly lined up like this, it's very rarely works out. And this is a case where it is beautiful. I mean, that's a beautiful development that could lead us right back to the dollar yen down to triangle major support down here, and there's the dollar yen major support. Now, I think it looks pretty, and it looks like it's going to break down. But just when things look like they're going to break down, it's probably not going to. So that's um, um, just some really key support down here. And like I said, a decent ISM or not so bad ISM. And let's look at the data that we have coming out. And this is data flash for those of you guys that don't know. This is what we have with ForexAnalytix with your subscription. You can see what we have. Oh, this isn't coming up. This is I have to go look at over here because that's the recently upcoming. So if you look at ISM, what we're looking for today, we're looking for a number of 55, which is still a pretty decent number, considering what we saw for the manufacturing numbers. But remember, we're a services driven economy, so let's say we come in at 54.5, which I think the market would be like, wow, that's not as bad as I thought it was going to be. You might get that move back up in the dollar yen. You might actually get a spike back up in the the S&P. And then you look at like the jobs reports tomorrow. If we create 100,000 jobs or 120,000 jobs, the market would probably be happy with that. Would probably be satisfied with that. Now, I think that we are at full employment, and I've been saying this for the last few months. I think that you're going to slowly see employment, the employment picture, weaken, and that's what we have been seeing. If you look at the charts, the employment picture over the last several months has been we're again being at full employment. This is expected. So as long as we're not losing jobs, I think the market's going to be fairly happy with that. Obviously, we need a little bit better number than just 100, or a flat reading. We need maybe 100,000. But like I said, I just want you guys to be really careful about getting too bearish equities down here, because yeah, you got the dollar yen that's at support, but look at some of these other pairs, like the euro yen. And I put volume. I'm not a big volume FX volume guy typically, but I put it on the chart because what I was looking at here with these yen pairs is the spike up in selling volume in all these yen pairs when we fell this last move. So you see the euro yen, really big selling volume came in. Pound yen, well, pound yen's it's the pound, but you can see that there was big selling volume down here. Pound yen is very divergent. It's not matching new lows with equities. Look, here's the Aussie yen. Aussie yen, massive selling in August, and then massive buying, and we haven't matched new lows in the Aussie yen, which again is divergent from the S&P here. New Zealand yen, massive selling volume in August, and now we're not making new lows, at least not yet. The Canadian yen, very similar situation, massive selling volume in August, and then we're not hitting new lows. So what I'm trying to point out here is the yen pairs are stabilizing when stocks are coming down, which means that if stocks actually bounce, these yen pairs are going to go higher. And if you think about like a China-U.S. trade deal, you think about like if there is a China-U.S. semi-quasi truce, backing off some tariffs, whatever the case may be, we could have these yen pairs rip up so fast. It's going to make our head spin. We'll see. You will see. Like the Canadian yen will probably be back above 82. You know, the New Zealand yen will probably be back at 69. The Aussie yen would probably be back at 74. You know, pound yen would probably be at 136, challenging this double top what you see right now, or just key resistance up here. Euro yen could very easily be back at 120. So, like I said, I want you guys to be a little skeptical about getting too bearish equities ahead of next week. Next week is going to be really critical for the market. Yeah, if there's no trade deal, let's say Donald Trump doubles down and he's like, you know what? Let's increase tariffs even more. Well, then you can imagine the S&P is probably going below 2,500, and that would be, you know, and all these yen pairs would be breaking down. But it all hinges on that, you know, and there are the very big meetings next Thursday and Friday. So just, I guess what I'm trying to say here is just be a little careful before getting too aggressive directionally in the market. It's been a nice decline in the S&P. We've had a nice pullback, you know, and as you can see here, these are the August lows. We're still making higher lows, guys. We are not making lower lows. Now, if the S&P was here, you know, technically, let's say it was this conversation right now, and we were right here at like 2750, 2740, I might be singing a different tune, because technically we're actually making lower lows, but right now we're not. Right now we are just, you know, coming off the highs, and you know, I think you're seeing some profit taking ahead of next week's big key China events. All right, so I said my piece. Steve, Stelios, feel free to jump in and give me your comments from what I just said regarding what I just said.
I didn't want to interrupt you. You talked about you know, possibility of increasing
That never
tariffs.
happens. That never happens.
Come
Okay.
on. You saw. I mean, it's not the same, but I found it quite peculiar that Trump decided to actually impose now tariffs in Europe. I mean, what do you think of that?
Oh,
It's
you
like
know
he
what?
wants to fight at multiple fronts at the same time. It's a little bit weird.
I was well, actually, we had a let me I'm going to pause this for a minute so I can read you something, because this is let me pause my screen really fast. I got to pull up my email to do this. Where is
Guys, you know, there are old Wall Street expressions sometimes work, you know, like sell in May and go away. And I'm not sure, I always get this one confused, but there's something like sell on Rosh Hashanah and buy on Yom Kippur, which would be next Tuesday. So if you go with that adage, the market should put in some type of low
okay?
next
So
week.
thanks.
Ever hear of that one?
Coach. I have, but something that I don't pay a whole
Where,
lot
at your bar mitzvah?
Yeah, at my bar mitzvah.
Okay.
No, it's you said it, I think, every year that you've been here.
Oh,
So
I didn't know that.
so one of my colleagues, you might have mentioned this or missed this yesterday if you weren't listening in yesterday. Ian Shepherdson, who's the uh, 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 head economist, British economist at Pathenon Economics, he came into our office in Connecticut earlier 3 days ago, and one of my colleagues said, "Hey, you know, I forgot to ask you about the Airbus." With the Airbus tariffs and the EU car spat coming in mid-December, how's that backing off China potentially impact the Euro-US trade in your view? This is a question from my colleague, and I'm going to read you his response. And this is from Ian Shepherdson, which some of you would know on CNBC. Now we're one of his customers or his clients, so he was doing a roadshow in New York for the last 10 days, and so he stopped by our office because, you know, we're paying customers, so he did that, and he goes, "I think any tariffs on EU products will be small and selective, nothing like the scale of the China stuff. There's not much support in Congress for EU bashing. It's just the same as it's just not the same as China. Probably more like Mexico's situation where Trump had to back down very quickly when the Senate GOP pushed back." 8 days from out of the blue announcements to total abandonment. Fighting 2 trade wars at once is a recipe for the S&P at 2,500, and even Trump isn't dumb enough to think that that will do him anything but harm. Tariffs on Parmesan cheese, yes, but on EU vehicles, I very much doubt. That was from Ian Shepherdson just yesterday in a response from one of my colleagues. So, Steve, there you go. That's from the chief economist at Pathenon Economics regarding that specific.
Oh, I agree with him. I was purely talking about show of intentions. It's not that I'm worried that Trump is really going to impose, like big tariffs on huge variety of products. I don't think he's going to do something like that. But still, I mean, within all this mess, trying to pick on Europe as well, I don't know, doesn't make much sense.
No, but you know what? He's going to do a lot of stuff that doesn't make sense, and then his advisors will be like, you really got to, let's think about what you're doing here. And it's, he is a lot of bark. He does bite, but he does bark a lot too. So, I personally, I don't think it's really going to go anywhere either, because I think China is his big target, and he actually wants Europe on his side going after China, but he also has to keep them in check too. So that's his way of doing that. So anyway, so let's just real quick. I just want to point out a couple things before I let Steve and Stelios take over. So as you guys know, the euro, this is a big inverted head and shoulder pattern here. If we have some weak numbers, this inverted head and shoulder pattern in the euro puts us above the resistance, which has been key. I even tweeted about it last night at 109.65. A move above that puts us, well above 110. So that's something that everybody should be paying attention to. And also the dollar yen. The dollar yen is obviously the big double top, W, inverted W, M top formation, that type of thing. And also one other thing is, are you guys watching the cable? Because the cable just took out some resistance here, and yeah, we might be, after completing this head and shoulder here, we completed it perfectly. Now we've been basing, and that's key. Even with the EU Brexit proposals, and I'm sure Stelios will talk a little bit more about that, where now you got kind of the EU and UK are in a little bit of a standoff here, or at least the EU knows what the UK is asking. We are starting to see a bid coming into the cable. So just something that you guys should be paying attention to, especially if you're on the short side of the pound. But anyway, I want to pass it over to you guys because we do have some data coming out, and I want to thank everybody who took advantage of our seasonal offer with ForexAnalytix. Remember, if you guys did and you joined our community, make sure you here. Let me go right here. Make sure you click right here. Is right next to your icon or your name. See that little icon here? It says go to our chat room. Our chat room's got, we've got right now 104 people in there. So and you guys are all on Jumbotron, so say hello. So just want to let you know, this is where I'm at all day. Amanda's here. We got Paulie's in here. Steve was just chatting in here. Stelios is in here all day. So you guys come in and hang out with us. This is like what I call like a safe place for traders. We don't talk about, try not to talk about politics. We just try to talk about trade, and there's no selling of products. We kick you out immediately if you try to promote your products or anything. We just talk about the markets and sometimes joke around too. So I'll see you there. Stelios, Steve, it's all yours.
Thank you, Blake.
And Coach. Thanks, guys.
Hey, guys.
Hey, Stelio.
Hey, Steve. How you doing?
I think good, mate. How have you been?
Very well, very well. So, do we have numbers now? We have jobless claims
in less than a minute.
It's nothing's going to change really.
Yeah, I agree with you. I don't expect any fireworks from this.
Yes. So
here it is, by the way. Just pulled it in front of us.
Yes. So the main thing really that I want to mention is, like Blake said, about the UK, where Boris Johnson is putting across a new proposal.
There we go, Celio. 219. Yeah, as expected. Yeah,
plus or
as
minus
expected.
5K.
So nothing is going to change from this. Yes.
So Boris Johnson is putting through a new proposal with a hope of agreeing on something by the EU summit on the 15th of October, I think. And he was quite punchy in Parliament and said, look, this is a compromise on our side. The Europeans have to compromise as well. Otherwise, we walk out with no deal. And the deal, I mean, it's been described a little bit, obviously, probably going to be fine-tuned, but it would mean that, as we know, the problem is with the Irish border. So Northern Ireland would leave the EU customs union with the rest of the UK, but there would be Northern Ireland will continue to apply to EU legislation for agriculture and other products. So basically, there would be some kind of continuity, and also there would be customs checks on goods traded between the European Union and the UK, but they will not be done at the border. So basically, it's going to be decentralized.
Yeah,
like
remotely.
Yeah.
In other locations further away. That's what they said.
I mean, if this was any other situation without the history between Ireland and Northern Ireland and the border and all that,
you would say whatever.
It would be solved within a day. But it's a very sentimental thing, and there will be, and there have been, a lot of pushback from both sides, and it still remains very difficult to actually agree on something, because you have the DUP who basically disagree on everything, and the Europeans who don't want to budge. So, if you look at it from the outside, you're going to say, look, there's no way there's going to be a deal. But I think, I've said this from day one, there's a lot of money at stake. There's too much at stake for both sides for not to be some kind of a deal. Will it be a good one, a crappy one? I don't know, and I don't care. But I think in the end, something will be drawn out, and then it's going to evolve. I think a no deal Brexit will be catastrophic, not just for the UK, for the Eurozone as well. But that's just my opinion. I've been wrong many times in the past, but that's what I think. So
you're more right than wrong.
There's only a few days remain, so we will see. We will know very soon.
One thing is for sure, we're seeing quite a healthy pop in the cable, right?
Yes.
Today. I mean, we're backtesting. We're about to backtest this 21, 23, 70 area once again. This time as a resistance. Let's see what's going to happen from here. Anything else, Celio?
And obviously, we have the ISM. Blake talked about it. Non-manufacturing PMI in the US, and of course the mayhem tomorrow. So we saw what happened with the previous US ISM number, which was weak, and stocks didn't like it. Will it be? It's difficult to decide on where we are. Is it the old normal where good data stocks go up, bad data stocks go down, or is it the new normal where it's the opposite? It's very difficult because the past few years, I was talking about it with a friend of mine here earlier. Past few years, you've had bad data, the market goes great, more QE, lower rates, we can borrow for cheaper and issue buybacks. End of story. So stocks go up.
It is too early to say, Stelio. Too early to say. But I have to tell you that I think that even the most naive market participants do realize that with current valuations, an actual recession would render impossible anybody to be able to save stocks from where they currently are. I mean, no matter what the Fed does, if the economy goes in an actual recession, which, month by month, data point by data point, it looks, more and more likely. I think everybody realizes that, even if all central banks step in and they do it like, in full throttle or whatever, that would still not be enough to prevent stocks from, at least moving lower, let's say at 20%. And now I'm talking like very, very conservatively. So I wouldn't be surprised to see that bad data is going to be interpreted as bad data having to do with risk, as long as the recession risk is looming. That's what I believe, at least.
Yep.
So I don't think the market is going to be convinced that if the Fed cuts by 50 basis points instead of 25, they can actually reverse an upcoming recession. I mean, it's too little, too late. So it's all about the actual data. So I do believe that we're going to have we're going to be seeing mostly negative risk reaction to negative data, not to minor data prints, of course, but things like the ISM manufacturing. I think so. Now, having to do with employment data that we have tomorrow, employment data are so unreliable that I'm just pissed off that we have to deal with them. Just think about it. Last year, we now know as a fact, and I said it, a month ago, that the vast majority of the cases that we thought that we had a big bit, we didn't, and the vast majority of the cases that we had that we thought that data were as expected, that was a big miss. How do we know that? Because they came back and revised a whole year's worth of employment data down by 500,000 jobs, which is roughly
huge. Yeah, it's huge.
40 something thousand per month. So for every month, on average, we actually had like 43,000 less jobs than what was reported. So who knows? I mean, we might see a decent print tomorrow and find out a few months later that it was 50,000 less. So who knows? We'll see. Now, another thing that here our friend Mauro mentioned before we go to the charts, because we have quite a few things to talk about on the charts as well, is with Biden campaign going in the wrong direction and Warren becoming the contender against Trump, when do the markets start pricing in the possibility of a Warren presidency? And this is something I've also mentioned in the recent past. There was I don't know if you've seen that, Stelio, there was a recent poll conducted among company CEOs about what the chances of Trump's re-election are. And, they voted something like 60%, above 60% that they believe that Trump is going to be re-elected. I have to say that it doesn't look like it. It doesn't look like it as we're speaking. Imagine if we actually see an accelerated trend lower having to do with economic data and the economy. I mean, his barometer, he set that on himself, his stock market and the economy. If the economy tanks, he has, in my opinion, zero chances of getting re-elected. But even as is, in the swing states that he marginally won to actually get elected the first time, because he did lose the popular vote, he seems to be trailing all possible Democratic Party contenders. And I do agree with your point, mate. The market is still ignoring that possibility. And I think that, pretty soon enough, it's going to have to start repricing that as well. And that is definitely going to be stock negative. Now, I'm not saying, what the actual repercussions of a Democratic candidate presidency will be to the economy. That's a different story. We can talk about it, another day. But I'm saying that I'm pretty sure that the market is initially going to price that as a negative. And it hasn't been doing so yet. So yeah, that is something else to consider. Now, obviously, the main event yesterday was the acceleration lower in stocks. If you remember, we said multiple times that 2960 was the key to unlock the downside. And yesterday, during the webinar, we were still quite high on the day. And I said that, now that we cleared 2960, in my opinion, 2890 being tested is a given. I actually had set my target to take half profits to my position at 2892. I wanted to be a little bit higher. I got triggered quite early yesterday. I added a little bit back to my position today. I have to tell you that there is one more key area here to consider. It's the confluence of this horizontal support area and the 61.8 of that last move higher, which comes at 2868. We almost made it there yesterday. We didn't exactly make it there yesterday. So it is now all about proving that we can stay below this ascending trend line support. If we do that, and yes, I do think that a bad print in ISM non-manufacturing is probably going to give that push lower, if that's what we get. I think it opens up quite a lot more downside afterwards, with 2800 being the next area of support. So stocks at the precipice of a very, very big technical breakdown. I think that by the end of the week, which is like in whatever 36 hours from now, we're going to know what's happening here. Okay, I mean, ISM today, ISM and non-manufacturing, and the NFPs tomorrow should shape that up. And I think we're going to have what we need to decide what we want to do in the week ahead. But as I said, a daily and especially weekly close below 2870, which is also going to be a close below this trend line, is going to be a huge technical event. And I'm quite confident that we're going to have big follow through. The market is going to start repricing quite a lot of things if that's the case. And I think that at least in the short term, fear is going to prevail. Now, another question that I wanted to answer, Evan is asking about how to get a proper broker, and very briefly the answer is going to be we have a reimbursement program. We work with ForexAnalytix, one of the best introductory brokers out there. So if you go to our website to reimbursement program, you'll find here both a Skype contact, as you see, and an email address. I suggest you use them. They will give you free guidance in selecting the right broker for your needs, because not all of us have the same needs. I mean, it's a different thing if you're a scalper, a different thing if you're a swing trader, different thing if you like to take long-term positions. In one case you care more about spreads, in another case you might care more about roles. It's a different thing if you have like a big account and trade big amounts or smaller ones. So they're going to be the people that are actually going to help you make the proper choice. Now, going back to the charts, now that we mentioned what's happening here with the S&P, Blake also showed that the USD yen is right on top of important support as well. I'm not going to show the same chart because I have the same drawings like he does. But going back to the DXY that Coach mentioned, if you remember, we were talking a couple of days ago about the importance, and I remember a few of you commented on that, about the importance of that purple trend line here in the DXY. You can see it here. So as you see, we came back, almost touched it once again, and we got rejected from there after briefly trading, I mean, for like a day, trading above this blue ascending trend line, this channel's trend line resistance. Okay, so yeah, the DXY is still in an uptrend. There's no question about it. You can see this red intermittent line that connects the previous lows, higher lows. But I have to tell you that another rejection from the same trend line still puts a big question mark about the nature of this move higher in the DXY. So, despite being unable to argue against anybody that wants to be long the dollar here, because you're on the right side of the market until proven otherwise. There's no question about it. I mean, you have proof, technical proof, that you're on the right side of the market, and usually following the trend is not usually, statistically speaking, following the trend is what will make you over time. Is what's going to guarantee better performance in the long term. But I have to tell you that personally, I'm quite skeptical, and if I see a breakdown from this trend line, I think I'm going to start pushing some USD shorts, looking for at least a move towards this channel's support, and we see what happens from there. Okay, so that's my point of view. I do think that if for some reason you like the dollar, you can attempt to buy it here. I mean, this is a horizontal support resistance area. We're currently retesting it as support, but personally, I'm not looking to do that. I'm still more or less neutral the dollar. But as I said, I have been and I remain very skeptical of this move higher because it doesn't look impulsive to me in any way. Now, obviously, yesterday's price action benefited gold, right? You can see it here. And there is a chance that gold has bottomed, right? I mean, we've already invalidated the potential head and shoulders formation. Usually when you get, some kind of formation like this triggering and within a couple of days getting invalidated, that's usually a sign in the opposite direction, first of all. Second of all, we already seen an ABC lower, and look where we found a low at the 61.8. So, it remains to be seen, but this morning star formation that we posted here in combination with this false break lower tells me that there is a good chance that we found a low in gold. Now, of course, there is also the possibility that we're going to see the correction extending more in time, perhaps slowly moving lower once again. So it's not like guaranteed that this corrective move has finished, but there is a decent chance, and you need to keep that in mind. Now, silver, as you see, more or less the same situation, found support at the 50% fib. Also has completed at least 2 legs lower. So theoretically speaking, it might turn higher. Now, something not to like here is that we retested today, actually, the 1775 horizontal support resistance area as resistance. And as you see, it has produced a reaction. It has actually rejected price action for now. So I'm a little bit skeptical still about the metals, but there is a possibility that we've seen a low. I want to see more price action. For example, in silver, if you want to be long, I would say wait for this descending channel to break to the upside. Okay. Once that happens, I think there is a very, very decent chance that you're going to be seeing new highs. The RSI, which is quite important, managed to work out the very overbought conditions. Look at this. The RSI on the daily in silver was actually touching 85. I mean, that's not something you see every day, right? And now it's back down at 47, so like a very neutral level. So I do think that, we might head higher from here. I just want to see a little bit more price action to feel more confident about it. Now, crude, if you remember, I mentioned yesterday that, listen, if actually the S&P does continue lower towards 2890, don't expect crude to recover in any way, because we know there is a decent correlation between them. And unsurprisingly, we had a big day down in US indices, and crude followed suit. So same deal here. I mean, first of all, we've completely retraced and more than 20% spike higher, bearish sign. And we have stocks that are giving us signals that they might be about to start, a much bigger move to the downside. So I can't be positive in crude any way I look at it. Having said that, keep in mind that 50.5 remains a significant horizontal support area. Okay, so we might see an extension higher towards 50.5, but that level might create some type of a bullish reaction, at least in the short term. Now, having to do with, I see your comments, guys, about the cable. Nothing really has changed about the cable. I mean, cable is back testing. Let's have a look at it on the 4-hour chart, actually. And speaking of which, let's also have a look at a few more of the pound pairs, since pound seems to be overperforming. So let's see. So this is the pound Kiwi. Since it was already open, we can have a look at it. As you see, still holding within this ascending channel. Keep in mind that it remains in a broad formation, big consolidation. So as I said several days ago, don't try to to get yourself in long-term positions having to do with pound Aussie and pound Kiwi. But we do remain in this ascending channel, and quite a nice reaction so far today. Let's have a look at the pound against the US dollar. And here's the pop that we got. And there we are back. Give me a second, because Mouse is misbehaving. There we go. Okay, there we are, back testing this horizontal support resistance area. As you see, we first fulfilled the head and shoulders target. So, you know, we had indicated that we had a head and shoulders target there. Actually, we fulfilled that. So, you know, this formation was completed. And, you know, now we seem to be moving higher. I would be very careful here. This is definitely an area of resistance. If we slice through it, I think we can see another leg to the upside unfolding from here. Next area of resistance, we can extend this, as you see, is at 125.70. So roughly another 100 pips to the upside if we make it through this zone that we're currently testing. Now, pound Aussie. There it is. Also still within an ascending channel, you can see it here. Right, also in a consolidation, I mean, if I zoom out even here on the 4-hour chart, you can see that there is no trend, right? No trend whatsoever. We still remain in an expanding triangle, symmetrical expanding triangle. We're more or less in the middle of it. So, yep, we remain well bid within this ascending channel, but that doesn't change the fact that there is no medium-term trend here. So keep in mind whatever positions you want to take. You know, you need to make sure that they're not long-term. And pound against the yen. Again on the 4-hour chart. Almost fully retraced this ascending wedge after breaking it, and we have yet to break out from here. Most likely you can draw this, I'm assuming, as a channel. Let's have a look at it. So I would be watching for that trend line. Might act as resistance. Okay, so, you know, a nice pop in the pound. Does that really change as we speak, you know, the overall picture of the pound pairs? No, it doesn't. It doesn't yet. I mean, we've seen, you know, intraday moves that sometimes they don't even survive the day, right? So I would start by keeping an eye on 123.70, 123.80 on the daily chart, and let's see if we manage to close above it today or tomorrow, and, you know, we take it from there. But yes, it's performing quite nicely, and this brings me back to, if you remember, I'm not sure if it was yesterday or the day before yesterday, but it was one of those days, I showed the euro pound chart saying that, listen, this reaction higher in the euro pound looks corrective to me. And, you know, the nature of this rebound makes me want to, besides throwing away this magic mouse, probably the worst product Apple has ever created. It's made for the hands of my son, which is 3.5 years old. I mean, not for my hand for sure. So, you know, this rebound high looks corrective in nature, and look at this. We're now testing this bear flag. I will call it a bear flag until it proves to be something different. We're retesting this bear flag's support as we speak. Also, this horizontal support area at 88.5 looks very, very likely to me that the euro pound needs to move lower from here, at least, you know, in the short term. So this doesn't look such a bad trading opportunity to me. I mean, there is a decent risk reward ratio, even here, being short against the highs. Coach?
Yes.
I just heard you moving around, so I thought, you know, that you unmuted yourself and you wanted to say something.
Oh, no, I'm just getting ready for the best interview of the week.
Oh, tell me.
The Alba from
Jessica Alba?
Believe Bird.
Nice.
Yeah, Jessica Alba's going to be here and talk about her candlestick technique.
I hope she has a camera.
She will be using a webcam, yes.
Okay, perfect.
All right, so
Perfect.
I think you'll
I'm-
tune in.
I'm pretty sure a lot of people will tune in.
And in fact, this Alba is going to be showing wolf waves. Do you know wolf waves? What they are?
First time I hear of the term, I have to tell you. So
Oh no, she's been on before. So
I'm really intrigued.
yeah, it's kind of like this. Hey there, Little Red Riding Hood, you sure are looking good. You're everything that a big bad wolf would want. Ow! That's a wolf wave.
Hello, by the way,
Hear
we
that?
have people greeting us from Amsterdam, from Africa, from the UK, from the US, from Australia. We have quite thank you very much. We have a nice viewership in the show, and we thank all of you for your participation.
Alba's here.
Joseph said earlier, it's not a deal that the market cares about. It is Trump giving up on the tariffs. I more or less agree with you. China has stood fast since day one. They're not going to give in to Trump's demands. I agree with that as well. They will wait until after the election. Depends. Neither side can really fold here. All Trump could do is claim some sort of victory and drop the tariffs. I agree with the last one, and I think that's what he's going to do if he really, really gets desperate.
Yeah, at Dow, at S&P 2700, he might pull that trigger.
Oh yeah. At some, there is definitely a point that he will capitulate. There's no question about it, and it will have to do with what the stock market is doing. So if the stock market is really puts the pressure on him, I think he's going to capitulate and do more or less what he did with NAFTA, make some kind of a new deal with minor changes, and then present it like as the best deal ever.
I saw a cartoon that shows him with a screen with charts, looking at the market. And in the other hand, he has his phone and his Twitter account.
Something tells me it's not far from reality, right?
And well, it's like, is he trading before? Let's see. I'll get short here. I'm gonna and then tweet. I'm raising tariffs.
Okay.
I'm long.
Okay. Let's put it in another way.
Oh, I'll tell Carl Icahn to do it.
That would be illegal. So I'm not going to accuse without evidence something of doing illegal stuff.
Oh, I'm not accusing. It's a cartoon.
Let's take it oppositely. Knowing how outspoken Trump is, if you were in his immediate environment, knowing what he is about to do, wouldn't that be extremely appealing for you to start, getting involved with the markets?
Yeah, he calls me all the time.
Yeah. Hi from Spain. Hi from India. What do you think about the Revolut trading future? Actually, I want to try that because I do use Revolut. And something, I've put a mental note to try it out of curiosity, but I haven't done so. When I do it, I'm going to give you feedback on that. Okay, Coach, since your guest is here, go ahead and enjoy the interview. I'm curious to find out what wolf waves
Wolf
are.
waves? Okay, yeah. Well, Alba is an expert. So, Alba, I'm promoting you to panelist, and then I'm going to unmute you. Where are you? There you are. And welcome back to Face. I don't know why there we go.
Do you see my screen?
Not yet. It's a green box, Alba, down there.
Yeah, you need to select
to share screen and okay. I have to.
Yeah, you have to select. Yeah, there you go.
Okay,
it's happening. Yes, we got him, Alba. Welcome back to Face.
Thank you. It's a pleasure
to have you
here again.
Yeah, it seems like we always get together when there's some vulnerability happening in risk.
Yes.
Weird, isn't it?
Pardon?
it's weird a little bit, you know.
It's weird. You're like a very guru or something. But
Anyway,
this
so
time we were a little bit late because
yeah,
the beginning of the movement was over here. You
right.
should have scheduled our meeting over
Can you
15th
explain?
of September. Yeah.
Can you explain to my colleague Steve, who's never heard of wolf waves, what they are?
Okay. A wolf wave, it's an advanced figure, a charted figure composed by 4 impulses and 5 points. The points are distributed like this. It's kind of a wedge, like a W or an M. And the W is a various movement. They respond to the action-reaction, to the third Newton law. And the original pattern was showed by Bill Wolfe, and he said the original target when a wolf wave appears. I have a blog where I tell how to find the points and everything. And when a wolf wave appears, for example, this one is a very wolf wave. Bill Wolfe says the target line or the price is going to fall when you join 0.1 and 0.4. It says 1, 2, 3, 4, 5, 5 points. Okay, so you join 1 and 4, and this is the original target. But when I traded with wolf waves and when I studied them, I've always see that the price advanced, but not always to the price target, because the most of the times it goes to the infinite, to negative, to 0.
Okay,
or
yeah. So if you continue that line,
yeah, it goes to 0. It goes to Dow Jones to 0. So I have combined it and I have calculated 2 targets. Normally.
So you're using fibs now, or are you still using the wolf wave for your targets if you're not using that?
Yes,
method?
I use wolf wave, and then if the price advances, I like to combine it with Fibonacci, you know.
Okay, all right.
And we will see some examples. So I had 2 targets for the wolf waves. This is Dow Jones in 4 hours, and for me it's completed. It goes normally, it goes exactly to the point, but now it has to stop just 2 or 3 points.
That amazing. I had a trend line right there.
For me, it's pardon?
I had a trend line right there too. So it's kind of a very interesting how different methods point towards the same area using a different technique.
I had the same figure in S&P, more or less the same.
Okay.
And okay, if you want, we can begin with your indexes with S&P and Dow Jones. We have now at 4, well, at your 10, the data from the Institute for Supply Management.
Okay.
The data of the manufacturing activity. The previous data last month was the lowest level in 10 years. So this is the only time we can have volatility for now. The indexes are very stopped right now. We in DAX index in Germany, it's closed, so there's no movement. We will wait for you to your closing bell to see our opening. So
okay,
I
so
have
that's a 4-hour target. You have different with dailies. The bigger the time frame, the larger the target.
If you remember, I had another bigger one. I'll draw it. Okay, this is daily.
Yeah.
And if I go to daily here in the Dow Jones, this was a bullish wolf wave. Okay. They hit the targets. Now with the bearish wolf wave, and there is the simple moving average, the 200 simple moving average, and this is a great support for the prices, a great level to stop the fall and maybe to have a bounce. If the price is up on this moving average, we cannot be comfortable with shorts, but any lower high below this area will be a great opportunity to shorts again to attack to the 200 moving average. If we combine it with Fibonacci from here, or in 4 hours from here, the area to reject, I don't know if I can draw. I think I can. 1 second.
So you'd look for 38 to 61.8% retrace. Okay, halfway.
1 second.
Yeah, you drew.
Okay. And now how can I?
It looks like Mount Pyrenees.
Okay. Okay, Dale. This is the area for me.
Yeah, right.
This is the area where we can expect the price to reject this 71.8.
Okay.
1 second. This 71.8 level concludes with the 200 moving average, simple moving average per hour. So maybe the price can go like this. And if we find a bearish pattern over here, that will be a greatest opportunity to open shorts again to attack this 200 moving average, the daily one, which is over here. It's a great support.
Have you seen examples of like where we are right now, where you've been sitting back waiting for a rally to sell that never comes and it just breaks down from here?
Yeah, but now we are in a different, well, maybe we are same levels, but there are a great rejecting maximums. And also the Bank of America Securities, is the previously Bank of America of Merrill Lynch, said that the S&P hit the top for this year. So maybe we can find new lows for the end of the year. 1 second. I want to draw the biggest one.
Okay.
I remember in our last meeting, we had it, or I draw it for you. I don't know.
Yeah.
I can remember.
It was before the break
this is,
last time.
Yeah, this is a bigger one. And the price can go over here. For example, this is Dow Jones. The targets could be over here. It's a huge movement. So maybe the party is not over for the various traders. So we have the same pattern or very similar in S&P, very, very similar. If we have proportion that we have in the wolf wave, it's better for the figure and for the pattern. And this was the first time, well, the last one we had the meeting, I think.
Right. Yeah.
In this poll, it stopped
you called
exactly
that
in this,
perfectly. Almost perfectly. Yeah.
Yeah, in NASDAQ, remember, and it has stopped in the same place. So it has attacked again.
Yeah.
Let's normally when the price attacks the highs, we have divergence, and it's better for us to have divergence. I don't have any oscillator right now, but I don't know if there is a bearish divergence over here.
Okay.
But the point for the S&P is the same. For me, I will wait for lower highs to open risky shorts right now, and in the point that the price breaks the 200 moving average, now the shorts will be a strong movement. Yeah, in a bigger.
And what would be downside targets in this, like the Dow?
Over here.
Okay, I like that. June low.
And more or less over here. To be conservative, maybe it will be bigger. Okay.
Yeah. Okay.
And gold. Let's tell us gold. We work a very Fibonacci in gold. I will mark it, which is completed. And now,
what led you to looking into this method?
Pardon?
What led you into looking into this method?
With Fibonacci.
Okay. Fibonacci led to wolf waves.
I like to combine them because Fibonacci.
Well, the question was, what led you into researching and using wolf waves?
Well, because the movement, the reaction of the price normally is very strong. And I didn't, when I was studying wolf waves, for example, I wasn't very comfortable going with the trend because I always entered late. I didn't have the ability to go with the trend with good entries. So I prefer to have movements against the trend which are faster movements than trendy movements. And that's why I studied the wolf waves.
Who told you about them?
Pardon?
Who told you about them?
No,
Did you
nobody
just
told.
Google? You just
No,
Googled wolf
no,
waves,
no.
or wow?
There's a book of Lina Martin.
Oh, okay.
I don't remember the title right now.
Oh, okay. So you
Of
found the book
1999, and then
played with
they appeared, but they appeared in a very simple pattern, as the three little Indians, they say. And then I began to study this movement, and I saw the reaction, the price reaction. Normally it's fast, so that's what I wanted, a fast reaction. And very important, it's very objective, the pattern. You have a concrete stop loss and a concrete targets, and for me that's the best thing to trade. I don't have to think if I can take benefits now. Do I close now? No, you have to close here and here. You can manage the position over here, but there's exactly a point to put the stop loss. You don't have to imagine, you don't have to think. It's over 0.5, and there are two targets, concrete targets, 1 and 2, or the original target. So that's for me the best thing to begin to trade with a concrete system. Or
well, if it isn't broken, don't fix it.
Mm-hmm.
And so that's working for you.
Yeah,
you know, when the S&Ps rolled over, we got a pretty good downdraft in the dollar. Is wolf wave giving you any indications of perhaps a top in the
dollar index or
Dixie or euro bottom? What's your take on the dollar?
In dollar index, for example.
Okay, sure.
Dollar index. If you want, I can see dollar index and the euro dollar.
Okay.
Which are what's the dollar index right now? Here.
How's life for you, Elba?
How's life for me? Pretty good here.
All right.
And you?
Is it taking your temperature?
Okay. This is the dollar index from the past rollover, I think. And well, I don't have much data right now with this chart. But if we see here, for example, euro dollar, later if you want, we can see it. I think we can have a bullish movement when it's having it right now for euro dollar. So dollar index is going to be down at least until 1.10 more or less. If you want, we can see it later. We can finish the indexes.
Sure, go ahead.
We can finish the indexes. Right now, I was comparing them with gold. I have something in gold. Fibonacci is trendy. It's a trendy system. So we are above the 50 moving average. So we have to throw the Fibonacci to see higher movements. Now the price is bouncing on the 71.8 level, and we have a bullish divergence here in the last 2 peaks of the price is falling, and the MACD is the same. So now the price is bouncing. This is a good support for the Fibonacci, and if I project the Fibonacci is the first movement projected from where it bounced. It is a very big bullish impulse for gold until 1,612, more or less. Here's a good area to have benefits. So if gold moves after, then I think the indexes will go down.
Right.
Okay.
Okay, so it's still bullish, and this was just a little, ABC correction, and you could see 1600 if we hold this week's low.
I don't have idea about it yet, but I think now, for example, this is gold, and I don't think that the S&P has replied fall accordingly to the the impulse of the gold. So we'll see. We will see.
Could they fall together?
Fall together. Sometimes there was a decorrelation. I don't know how to say the word. When these
Correlation.
the correlation, but the contrary, the other word where it goes
the opposite way.
Yeah, the opposite.
That it's a hedge, or it's a counter risk aversion.
Gold
People
is
buy
weekly,
gold.
and in S&P, for example, in weekly, it hasn't fallen a bit. So I think the movement for the S&P has begun, but it has to break the 200 moving average. Is the area, the key area. So let's go with the euro dollar and
anything you wanted to. Okay.
We have an attack for dollar and Swiss franc, to this area, which is a key area.
Yeah.
And it had this reaction, a rejection, a strong rejection here that went with this bullish reaction in euro dollar. These two pairs are the same in correlations. One goes up and the other goes down.
Yeah, but there was a weird move the other day.
Yeah,
Euro was
yesterday.
down and Swiss was up in your face.
Yes, yesterday.
Okay.
Because here, this pair is very
manipulated.
Yeah, by the Swiss bank. So I don't know if they have anything to say about these attacks to this area, but it's not normal that what the euro dollar is going the same way. I think it makes a little baby head and shoulders inverted. I'm going to keep here.
A little baby.
A little baby is a mini one. This is small, but
you probably want to be a mom someday, huh?
No.
No? What's your phone number again?
My phone number. Dale. Okay, this is the baby. This is the baby head and shoulders inverted with the divergence, with a bullish divergence over here. You see the price going down and you see the MACD going up, the two peaks. And there is a good thing that if we throw a Fibonacci here, also, it bounced in the 61.8 level. So if we project this little baby, because it has broke the neckline, has broken it, and it has bounced right now. This movement is very good for the euro dollar. The projection will be over here, the 1.10 area. So the dollar Swiss franc should have been made
high. Yeah.
Okay. It has been it should have been rejected, and it's fighting again against this area. So the only proposal I have that it's clear for me and it's logic is this one.
Okay.
And I have closed everything in
Why
dollar.
fight something that is out of kilter? Go with what makes sense to you and is
Yeah.
trading the way you think things should trade
Mhm.
instead of a aberration.
Yeah.
So I'm with you,
And
Alba.
to finish, but we have to be very careful because of the Brexit and all the Boris Johnson things. And is this
Yeah.
one?
What do you think is going to happen, Alba?
I don't know.
Okay. Yeah. All right.
British people are very crazy, and
They're very crazy.
yeah, and yeah, and maybe they
I
go
should
with
move
a
to
hard
London then.
Brexit. I don't
Yeah.
know.
Yeah.
But right now,
They're not as
how-
laid back as you Spaniards, right?
no, they're not the same. Right now at 2.30, Boris Johnson said to Jeremy, if you have to accept our proposal or there will be a hard Brexit right now, the 31 of October. And Jeremy Corbyn answered him that his agreement was worse than Theresa May, that was before him, and then they won't support him. So they are fighting, and I don't know, and I don't know right now, but technically.
Would you be a seller at your RWH level, that red thing up there? The
I'm
red
now I'm
long?
long in British pound dollar. Because
Okay.
of this, I'm going to tell you, but this is a very risky trade because of Boris Johnson. So everybody be careful if it's
Okay.
trading British pound. We
Yeah, that
have
was a
here
nice
the
3 drive.
bullish divergence. When it's a bullish divergence, the first bounce, I like to combine it with Fibonacci, and it has bounce in Fibonacci, and with a strong volume.
Yeah, nice.
Buyers are buying British pound, and this is the projection over 1.28.
28.
Yeah, more or less. But this is a huge Fibonacci, and over here there are 100 pips. I am plus 30 pips more or less. And everybody manage the position, please. And if the price goes over here, 1.257, 1.258, close partially, yes or yes, and adjust the stop loss. The stop loss should be over here below 61.8, 1.228. It could be great. Not 28, 21. Sorry.
Some more great looks by you today.
Pardon?
Some more great looks from you today.
Some more?
Some great looks, some great charts, some great visuals, very nice technical work that you never disappoint, Alba. You come in here with prep, and you have skin in the game. These are trades you believe in, and I've seen a lot of your forecasts manifest. So I do respect what you say on Twitter. I respect what you say when you come in here, and I definitely think that people should, at the minimum, follow you.
Thanks.
So tell people how to do that now.
To follow me, okay. This is my Twitter at ForexAnalytix, and they can follow me here, and this is my blog and my website, but it's in Spanish. The only website I have in English also is the Wolfway blog. This is fondadeblog.wordpress.com. Here I have English posts to share the figure, the pattern, and explain it.
Do you have a translation on that page?
Yeah, I have English posts here.
Cool.
English posts in the category. English posts, and I have some of them in English.
Okay.
Basics, but they are the basics of the figure, but they have it. So this is where they can find me. In Twitter, ForexAnalytix, and anything they need, they can write me. I normally, post charts the cleaner as I can.
Yes.
And
there's your car.
That's anything. No, that's not my car.
Okay.
Okay, then.
All
That's
right. Well,
the
thank
only
you.
thing I can tell you right now, that the fall
Okay.
and the short move has
Well,
finished.
it was
Yeah, first
another,
race.
yeah. Thank you so much for coming in and edifying the FACE community and teaching Steve Volge a little bit about wolf waves and me too. And may pips wash
Yes,
over you
hope
just like
so.
the waves in the ocean when you're at the beach, lying
Yeah.
right there at the edge of the shore.
Yes, Dale, same for you.
You like that image?
Yeah.
All right. Okay.
And
Well.
your song of the wolf waves, I heard it.
Oh yeah, Little Red Riding Hood. All right. Well, Alba,
Okay.
it's a pleasure. Thank you, my trading warrior sister, and good
Thanks.
hunting. And let's get back together this winter and see how things are playing out.
Okay, Dale, thank you very much.
All
Bye.
right, everyone, to follow Alba at
Thanks. Bye.
Albitamix. And that's a wrap. See everyone for the NFP tomorrow. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios.